tech this morning. Welcome back to Morning Trade Live. It's time for the big picture. So let's welcome in the team from Charles Schwab, Nathan Peterson, Director of Derivatives Analysis, Schwab Center for Financial Research, and Cooper Howard, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research. Okay. A lot to get across this morning, guys. Nate, let's just start with you as far as what we're seeing with the sell-off in tech here. I mean, what do you make of it? Nvidia is under some heavy selling pressure today. 170, key level of support there. We broke through that earlier today. What do you make of it?
Yeah, Sam, it certainly has the AI, sentiment has certainly shifted just in a couple months here. I mean, if you go back to August, September, it was basically that any investment, any deal in AI is good news. Any CapEx spending increase is good news. All of this suggests we're early innings in this secular growth story. And basically, the tide was lifting everything AI. Now you fast forward here and look at Oracle down at 5-month lows. Alphabet up at all-time highs on that news that they are in talks with Meta, or at least pitching the idea of having their chips go into Meta versus Nvidia. So that's not good for the sentiment around AI. And you look at and now it's become, we look at the CDS swaps on spreads on Oracle on a daily basis just to get a sense of what is going on around the concerns of overspending here and some of the discernment around the fundamentals within AI. So, Sam, look, December 8th, less than 2 weeks, we've got an earnings event from Oracle. I'd almost put this one as more significant than Nvidia at this juncture. So it's going to be interesting to see what Oracle has to say in order to kind of mend or heal some of these concerns that they have around their heavy debt issuance. Take a look at margins and cash flow from what they report to make sure that's okay. But, my question I have, larger or broader, I should say, Sam, is that if we're going to have trouble with this AI trade going forward, are we able to get the other, sectors? Infrastructure looks good. Industrials, we know that thesis is intact. Healthcare, we've seen that hit, perform really well here recently. Can we get some of these other sectors to hold up the indices if AI is going to be a bit of a question mark? But again, circular calendars, December 8th, Oracle, that's going to be a date that's going to help define sentiment around AI.
Yeah, and then a couple of days later, we're obviously going to be getting the FOMC. And so on that note, I do want to switch gears to you, Cooper. I mean, so much information this morning as far as choose your own adventure on macro data, PPI retail sales. We've got some pending home sales. We've got consumer confidence. I mean, it's all painting a pretty mixed picture as far as some of the analysts are concerned here. But if you take a look at the probability that's been priced into the market of a rate cut, we're now jumping up over 80%. We've got the 10-year backing off. We've had the DXY coming down. We're at 99 right now. What is it telling you?
If you want to talk about a reverse of sentiment or kind of a reverse of how things are said, like Nate had mentioned, yes, that is happening in the tech sector, but also look at expectations for Fed rate policy. So if we go back just a month, it was about a 30% probability of a rate cut at the December meeting. Fast forward to where we're at today, and we're almost at an 80% probability of an interest rate cut at the December meeting. So quite a big shift in that. And like you did mention, Sam, it is kind of a pick your own picture pick your own story as far as what the economic picture is being painted of. One thing I think that's interesting about it is that we're kind of getting the floodgates of information that started to be open. But with that, some of the data is as of September. So we'll see how much does the Fed weigh into it being September. I think recent comments by Waller have been relatively important. Also, more of a focus on the labor market. I think we'll see if there is further softening. Maybe that does further tip the scales to a December rate cut. But in our view, we still think that a December rate cut is still very much up in the air. But going forward, we do project that the Fed is going to continue to cut interest rates, likely at a slow and methodical pace, though.
What about Besson's comments this morning, Cooper? I mean, very good chance that Trump picks his new Fed chair by Christmas. They've got 5 strong candidates, and also some interesting remarks about how he thinks the Fed needs to fade a little bit into the background and calm down. What do you make of that? How significant is that for the markets?
I don't necessarily think it's too significant for the markets. Now, obviously, if we were to get a Fed announcement of a Fed chair sooner rather than later, that would be something very notable to the markets itself. But if you look at a lot of a lot of commentary by the executive office towards the Federal Reserve, obviously it has been very negative over the time. So I think that that's going to be something to continually to watch, see how they navigate through it. I do think that the Fed is in a difficult position because we are seeing some softening in the labor market. Yet, if you look at today's PPI numbers, Sam, they aren't coming down as much as expected. They were close in line with expectations, a little bit below, but they do show to us that inflation is still elevated. So with inflation elevated, labor market starting to soften or continuing to soften, that does put the Fed between a rock and a hard place, if you will.
Okay. And just back to you, Nate, on this whole AI tech kind of trade we're seeing. I mean, look, it looks like it's on a little bit of shaky ground, but there has been very much a lot of conversations about a bit of a rotation as far as leadership is concerned. What are you seeing out there as far as what the technicals are pointing to?
Yeah, on the technical front, I mean, on Friday, we basically we already lost, the first level of support at the 50-day SMA for the S&P 500, NASDAQ, and the Dow. On Friday, we went down to the 100-day simple moving average. We bounced off of that. We got it looks like support was holding up on Friday. Thank you, Williams, for those dovish comments that seemed to help. That kind of teed us up for yesterday's rally. We get this bounce. But right now we're at a critical juncture because we're kind of pushing up against the 50-day simple moving average for both the S&P 500 and the NASDAQ on the underside. And so the bulls want to see the markets clear that 50-day simple moving average in order to get a confirmation that that was the test at the 100 SMA. Now we can resume our uptrend. We've got bullish seasonality, potentially a Santa Claus rally, et cetera, that could come into play. But if we get rejected, Sam, at the 50 SMA, meaning we go up to it, but then we roll over, that would be a bearish confirmation. That's actually called a pullback in technical analysis land. I know a lot of people think about it when you're coming down to support. That's a throwback. This is actually called a pullback, and you don't want to see that if you're bullish on the markets. So we should know more by the end of the week whether the S&P 500 can reclaim, that is, get back above the 50-day simple moving average.
And of course, a shortened trading week. We've got one full day tomorrow, and then we've got a half day on Friday. So let's see. Don't want to spoil your turkey for you. Thanks so much for that. Nathan Peterson, Director of Derivatives Analysis, Schwab Center for Financial Research, and Cooper Howard, as always, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research.